Okay, welcome. Thanks for joining Options Unleashed. We're live today looking at Disney trade. I know everybody's excited about this Disney trade. Let's see if anybody is here in the chat with us. So welcome to Options Unleashed. This is a new show called Options Unleashed Halftime Report for options, and we're going to cover a little bit of the macro, what's going on in the SPX and the Qs and all that stuff, and the news and the headlines, but then we'll jump into some option trades because this is really more about options. So if you're interested in option trading, either beginner, advanced, this is the place you want to be. This is where we discussed some really cool strategies. We go over best practices. We'll cover questions. Try to make it interesting, and hopefully if we can grab one piece of new information out of the channel, out of the feed, then that was great. Hopefully you can and contribute to, and also join my Discord if you can. Options Unleashed Discord, or follow me on Twitter and YouTube. In my profile, I have links to the Discord. So let's just jump right into it. Interesting day today. So S&P, there's, in terms of everything seems to be down today except for gold. It looks like the Qs are struggling by more than 1.5%. Spiders are down by almost 1%. We had that big run up last night after Powell gave the whole all clear, let's party yesterday, and then today the futures were down again overnight, just like kind of in the past couple of days, the same pattern. Futures are down, and looks like the stocks tried to make a run early, bounced around, and then just started selling off around 10 o'clock this morning. Just continued tail risk from rates having to be higher for longer, and the wage inflation, that whole tail risk of unemployment is too low, although they're talking about now that maybe those numbers were hyped up for January, so we're going to need more data, obviously, but just more higher rates for longer are going to be in the works. I haven't been following what's going on the last couple hours, but it looks like things have started to sell off, and I'm delta negative, so this is good for me. You can see on the VIX here, and again, if you haven't heard already, I have my equities on my left-hand side. I usually use the 1 minute, 5 minute chart during the day, and then I have the VIX over on the right. This is a 1 minute VIX chart, and I use that really for gauging trends and what's going on in terms of the fear index, the VIX index. I don't trade the VIX. I trade UVXY for options. We can talk more about that another time, but I'll zoom out and look at the VIX and see what's going on. It tends to follow certain levels sometimes it does, sometimes it doesn't. I'll look at a 5 minute chart, and then it'll come up here and test and see what, I use that for gauging where the S&P is going to be going. It looks like, for this morning, the VIX just got elevated all the way up to 20. It looks like maybe China's back in focus with the China balloon, the spy balloon, or weakness in different, there's a headline here, weakness in Alphabet continues to weigh on the market. So different headlines are going to be causing different things, but so in terms of the portfolio, it looks like I have a slightly green day. It looks like I'm winning on this I have a SPX Iron Condor. I'm short a lot of the retail, short premium, a lot of retail names like Restoration Hardware, Wayfair, Ulta, Target, Nike. I do have a Disney trade on already. We'll get into that for the earnings call. And let's see what else. That's about it for retail. Tech, I'm losing on Nvidia, Tesla, Netflix now. yesterday I covered why why I'm short premium there. I rolled up I didn't roll up, I bought back my puts. So I'm still delta negative. If I sort this by delta, you can see I'm highly delta negative in SPX. So let's take a look at the SPX, which is the cash, right? The cash account for the SPY, for the S&P. So I have an iron condor in here. Still expecting it to go negative a little bit here. So I'm okay in this trade. Again, I sold the call spread when the SPY ran all the way up on the Powell speech last week. And then I sold a put spread on weakness the following day when we had that big sell-off on Friday. So this was more or less just to stay to just play on volatility, as we had a bunch of news. I was just trying to capitalize on the volatility. I normally don't trade the SPX, but I wanted to be in, so I got in. On NVIDIA, NVIDIA has been working against me. I bought back my puts, so I'm fine there, but I still got 2 contracts outstanding for March. I have the 230s, and then I even went out further to the 245s. So I'm fine in here. I've got positive theta. I need negative gamma. I need this thing to move down quickly before March 17th. We have 37 days. I'm not too worried in here. So got a lot of theta decay to work off. If the stock moves down 10 points, I'll probably sell a put to make that a strangle. So not worried about NVIDIA. NVIDIA, Tesla, Meta, want them all to kind of sell off a little bit in here. Tesla up $2 again against me, and I have 2 or 3 now calls. Sorry, I have the March 10th 235 call that's got, again, positive theta, but I need just need it to be under this 230 level. And the reason, what kind of getting into a little bit here, the technicals, I had covered it in an early video. The reason why I targeted 230 was basically up in this range up in here. I didn't expect Tesla to go too much higher than that range up here, the 235 level, because that seems to be a little bit of a kind of a resistance area or supply zone, if you will, up in here. So I'm expecting Tesla to fall a little bit. And I think a lot of people are kind of surprised that Tesla is kind of running this high. So we're kind of just, the trade was more about seeing if Tesla can do, basically kind of come up, maybe test this 50-day and break a little bit, and that will be a profitable trade. I don't expect it to go straight up. And if it does, I'll adjust, and you guys will see that on the halftime option show. That's what it's for. Let me get rid of this guy. Can't seem to get rid of this thing, can I? Let me just get rid of this. I hate when these get in the way. What else? And NVIDIA, same thing. These are all moving up on these are all moving up on ChatGPT and the whole AI thing. So again, it kind of a little bit of a bubble right now, short-term bubble around AI and ChatGPT. So, that's the issue with those guys. It's going to run, and I'm just going to have to deal with that. But I'm okay with those positions. I'm fine with where I am. Same thing in Meta. I had a blow off top with Mark Zuckerberg earnings and kind of go into the supply zone. I'm fine with Meta. It's actually down big today, down 3%. So Meta is actually doing well for me today. I'm kind of just break even on the trade almost right now. And again, if we get a little lower on Meta, then I'll sell some puts. But we're all here for the earnings call today on Disney. Let's see what else, though, I got going on in terms of major winners that I could take off. So at ServiceNow, I've got some decent winnings on this one. I've got I'm in the money on this. or profitable on this. Again, we try to take off our trades at 50% probability, 50% profits, right? We don't go to the full extent here. So if you're looking at what I got on ServiceNow, I've got a 410 put that's almost 50% profit. It actually, yeah, it's almost 50% profit now. And you could close that position down for $3, but I'll let it run a little longer. I'm not too worried about it. I've got a short call, two short calls on ServiceNow. I just went negative into the any move up last week. I just went more negative into the print, and so I've got two short calls and a short put. Different expirations, but that's kind of the picture right now. I'm kind of happy with this. A huge wide range for ServiceNow. That's a big strangle. Again, we got my SPX we just covered. Netflix is big strangle on Netflix. Happy with it. Out to March 3rd, being that 23 days to expiration. Happy with that. Positive theta decay there. Ambarella. Let's take a look at Ambarella. I have a Jade Lizard on Ambarella. Happy with it. Expecting it to move down. But nothing crazy here. Just kind of expecting it to maybe come down and test that trend line. These are the cameras. They sell cameras for automotive. They're in all the Teslas and all the automobiles. They're leading camera, if you will, company and vision, right, for autonomous driving. So I was playing this one with Tesla being before earnings, just seeing if it would come down. And that's just a Jade Lizard. I'm still profitable on this trade. I have no risks to the upside. We talked a little bit about Jade Lizards yesterday. If you want to learn more about that, hit my Discord. We can talk about that. You're basically you're selling a call spread, and then you're selling a 16 delta put. That would be your typical Jade Lizard, which is no risk to the upside, and all your risk is to the downside. It's actually a good play to play before earnings, after earnings. If something is a double top, like if take a look at Restoration Hardware, I've done Jade Lizards in there before, because you look at tops and you just kind of say, okay, there's no risks to the upside, so I can play a nice Jade Lizard down into there on a sell-off. So that's been doing well for me as well. Even though right now I have just a strangle on Restoration Hardware. That's about it. Nike, DRI, these are all retail, but I think these are all more Jade Lizards because I tend to play them now. Nike's doing a great Jade Lizard with positive data in here. Like it exactly where it is. That's a nice little profit going out to February 24th. That would be 44 days out. If Nike can stay in here, I'll be fine. Darden Restaurants, another retail trade, just expecting it to fall off a little bit and profit big time on DRI. Just too far, too fast on the retail, guys. And you saw last night, CMG, let's see where they are. They had earnings last night and they missed by, they were down 3% in after hours, something like that. And they kind of tried to struggle to get up, but it looks like they're still selling off in here. So, yeah, the retail trade, there's going to be higher costs for workers and margins are going to come into question. So that's the problem with these things. And that's the problem, I think, with Disney, right? Disney hires a lot of people that, they hire a ton of people, right? So they are going to report. They're going to struggle to report with higher wages, right? So let's take a look at Disney now that we're into it. We'll spend a couple minutes on that. Go over my existing trade and talk about where we think the stock's going to go. It was up earlier this morning It's still in this huge supply zone after this huge run down throughout 2022, right? Just got crushed. Bob Iger is back at the helm as CEO. There's an activist that's trying to get a board seat that doesn't like the way the company's being run. It's also benefited from this whole reopen trade down here. China's reopening, the park's reopening, all good news, kind of almost like a too fast, too far, too far, too fast story. A lot of people are positioning, a lot of the pros I think are positioning, or they would like to buy the stock under 100, and I'm in that same camp. I don't own Disney long. I used to. I sold it a while ago and 2 years ago for a decent profit. So I'm looking to get in. I was in at 100 and sold it, at like 180, 184. And I'm looking to get back in at 100 and sell it again at 184. So it's going to be a long-term buy for me. It looks like it broke out here. But let's take a look at the couple scenarios that can happen. Let's first look at the expected move on Disney. So if you go to the Thinkorswim, if you're using Thinkorswim, there's an easy way to find out. They have a little indicator here that gives you the expected move for the end of the week, the short months. Implied volatility we were watching during the week, it went up from 78 to 100% now, implied volatility. So that's good. Options are looking good for tonight's earnings report. So it looks like about a 6%, or sorry, a 10 less than 10% move. Looks like it's about a 6% move, right? Or 7% move, a little bit higher, I guess, they said an average. So that's good news for us because we can sell premium. Though another way to look at expected moves is there's a couple ways that you can do it. One of the tried and true ways that you can do it on any platform is take a look at the straddle on a given position. And a straddle is the ability to buy a call and a put at the same strike, right? At the current strike. So if it's 111.40, we go out to the 111 and the call, if you want to buy the straddle 695 or buy the put at 695, it's going to be the same price at the current price, right? So this is the price to purchase a call, 695, and the price to purchase a put 695. That's going to be the premium for this Friday expiring in 2 days. And so what you do is you basically take the average of these two numbers, the buy and the call, the put and the call, and that would be your expected move. So you can see it's around 675. So that's one way to find the number. If you can use Yahoo, you can use any platform. Just look at the straddle, because the straddle is the price. If you're buying a straddle, let's say if you're clicking on this and you're buying the straddle, you're going to pay 675. So you're not going to make money on the trade unless it moved 675, right? Another way is that up there in the Thinkorswim tab, it tells you what the expected move is. Another way, if you're just looking at the single options for the week, you look at the 16 delta, right? So the 16 delta, which is, I'll say 17 right here, it's bidding, the 104 puts is bidding 77 cents. And the 16 delta calls are bidding 75 cents. So if you took a look at this trade, here's one way you can play Disney. You can sell the 104 put and sell the 121 call, making a strangle. You're going to collect $1.52 for that. And so that's not a bad trade. We typically look for like about $1. And again, the expected move coming out to February 11th, here 10th, we'll put it here. And then we can set our strikes, set our slices to break even on the 11th. This will give you, it says about a 98% probability of success in here with a 16 delta. But my concern usually is that in these earning trades, when you kind of have a lot of uncertainty, we've got a big range of stuff going on with Disney. If they throw in the kitchen sink, right, and they really kill the quarter and they're really uncertain about streaming, you can see an easy 6 to 12. You can get a 2 standard deviation move, right? So that 16 delta, why do we say 16? Because again, remember from a normal curve, right? 68% of this one standard deviation is where 68% of the population resides under that one standard deviation, right? So 68 minus 100 is 32, and then 32 divided by 2 on each side gives you 16. So you have a 16% chance if you're, when you have a 16% chance of being right on the put side, and then you have a 16% chance, of being correct on the call side, and you put those together, and this is your one standard deviation risk, if you will. But because stocks can move outside those ranges, one of the things that I like to do, especially so if you're comfortable with earnings, if you've never done earnings, this can be a scary trade for you. Number one is the margin requirement for this is a little bit much. If we were to actually just make this straddle, let's make this straddle a one trade with 2 legs, $1.52. If we go and confirm and send that, it'll say that it costs $1,500 in buying power reduction to place this trade. So that could be expensive for some people. $1,500 in order to make $153 is an expensive proposition. So another thing you can do is you can round that out by making it a iron condor. So you take that 16 delta and then you add to it the 2 other wings, if you will. So we had our 16 delta, and then we can go ahead and buy the 2 wings, making that an iron condor, and now it's defined risk. It'll be $71 to make 30. So it's this is how you would form an iron condor. So that'd be another way to play it, but your credit is only 30 cents, and typically we try to collect about a third of the width of the strikes in profit. So this isn't really a great credit. It's not a great, and we can cover more about this in the show and in Discord. If you have questions, please ask questions in my Discord in Options Unleashed. There's an Options 101 section. There's the daily grind. People ask questions all the time. If you're not sure about these credit spreads and what we look for and how much to collect, this was not a show about options today. This show is more about making different Disney options for earnings. So that's one way you could play it. So that's the iron condor. Again, we can go back to the 16 delta iron strangle, which is $1.53 right now. And then let's just do a couple other trades for ha-has just to show you what they're going to look like. You can also target, let's just go back to the chart for a minute. Let's just zoom in on here for a second on this chart, and let's take a look at realistically what can go on, right? And a lot of this is just technical analysis, and some of it is just gut feel, right? And experience and things like that. And at the end of the day, you don't have to trade it, first of all. But second of all, if you want to trade and be what we call in the trade, then you kind of take a stab at it, and you'd have, try to use defined risk. And if you can't, then make sure you're on top of your trades and make sure you know how to, risk only what you can afford to lose. And that we cover that too in our Options 101 course. We talk about position sizing, because position sizing is the number one thing that can kill you in a trade. So let's just talk about what could happen if Disney disappoints. We're talking about a couple levels in here. I've got them marked already. They've got kind of like a low from back over here, and got a lot of support in here at this 100 level. that would put it almost at 2 standard deviations. Like yesterday was trading at 112. Uh, that would probably put it around 2 standard deviations. And notice also that this is at the 50-day moving average on Disney. You're talking about the 100 to 101 level. If they report disappointing earnings, and if it's bad, if they throw the kitchen sink in, you could probably expect to see that immediately, right after the close, right after the report. If it's like extremely bad, or Disney closes down at the end of the day down near this 108 level and closes down 12, you can actually see that gap being filled over the next couple days. So if they like I said, if they kind of come out and they kind of throw the kitchen sink in the quarter, you can see one of these moves, and then you can see a move down, and then you might see some back and fills and up and away. That's over the next couple weeks, months, right? That's one option. Another option is they crush the earnings. You're going to see a $6 to $12 move. That would put you at 116 up here, 118, and it will just flatline. And then if you see a flat line after hours, and then it could go and fill this gap at 119, and then it can actually just keep grinding higher and fill that at 126, and it's off to the races. Another thing it can do is after a couple weeks, come back down and retest these levels, and then allow like the pros to get in at either this level. The pros would be looking to get in at these levels here. So that's kind of from a long side. I would be positioning to buy Disney around between the 95 and 100 level. I would be a buyer of the stock because Bob Iger is going to turn the company around. A lot of it has to do with guidance, obviously, but he's going to come in and they're going to kitchen sink it, but they're going to tell you that they got it all figured out and it's under control, and he's going to return this company to profitability. That's number one. If they did crush it, he's probably going to temper it a little bit and say they have a lot of work to do in streaming. The parks are doing well. They did great with Avatar. They've got Marvel lined up. They've got more Star Wars movies coming out. Blah, blah, blah. They're going to try to temper it because they don't want it to go up too fast anyway, because, he wants to do well by shareholders, but they're not going to they're not going to crush it, I don't think. But if they do, they do. And then we come back and we hopefully get it back at a cheaper price. And I'd be a buyer at that 112. If they come out and crush streaming, I would want to be a buyer of that as soon as I can get a dip or a pullback. And you're going to get a dip or a pullback. I mean, look at the the stocks in general. Earnings are negative. That's another thing I wanted to tell people is earnings are now negative for 2003. I think it's the first, I don't have the stat in front of me, but I think it's the first time in 17 years that earnings have been down. So don't expect, even if they do well, they're not going to go to the moon. They're going to come up to this level, come back, and you can still buy it at that 112 level. So in terms of the options, then, what are our different levels? It's pretty much that $6 expected move, but you have to ask yourself, am I going to have a bigger move besides $6? Another thing I look at then to determine that is I look at the option calls and puts for the day. There was a lot of call buying this morning, but it looks now like there's more puts in terms of sizzle. There's a 2.2 put sizzle and a 1.7 call sizzle. So right now people are predicting that Disney's going to kind of sell off after earnings. But that's because of the market is down as well. So let's just say we wanted to look at another strangle that we want to be in the trade. You got your 16 delta here at 104, but let's just say we're not feeling that great about that trade. You can go down to the 100 level, and then you can also kind of just sell. You can sell that 16 delta at the 121 level, but let's say you wanted to get up to about 90% out of the money. You can sell this one at 45 cents, for the 124 call, and you can make that a strangle. Now you've got a much bigger probability of profit. This is now a 70-cent strangle which will yield you $70 for every $1,100, right? And this is in 2 days. So you're risking $1,100 in 2 days to make $70. That could be a potential trade for you. And then lastly, because I didn't want to spend a lot of time on the trade today, just giving you different options, right? So you've got your 1 standard deviation strangle, you've got your almost 2 standard deviation strangle, if you're interested, because there's not a lot of juice in Disney. Another option is just what I did was I put on the other day a put diagonal for Disney that, you know, it goes this Friday, but also into next week if they really come out and have bad news. It's a low defined risk trade, very low risk. What it entails is I'm selling the February 10th, right, 94 put, collecting, in this case I collected 8 cents, and then I paid for a week out in the future, I paid 28 cents for a 95 put that says that Disney will go lower than 95 by then. And so the way that put diagonal works is, you're risking a very small amount. In this case, it was a 20-cent trade. I think this is actually, if I were to analyze this right now, I think it's actually selling right now for 16 cents. So you can get this trade in for 16 cents. And that would be profitable if Disney drops, down. We would take it off down around the $100 level. You wouldn't expect to get the total. This is a theoretical profit in here, but we'd probably get maybe half of that. Probably get $600. We'd be lucky to get $600 or, $600 to $1,000. If they really disappointed, you could make a serious amount, but I don't expect them to move more than $12. And when I put this trade on, it was lower. It's already moved up a little bit. So I'm not in love with this trade, even though I have it on right now. I only have a couple contracts. So by the end of the day, I might be inclined to actually do more of this strangle idea with my put diagonal. So I might actually be inclined by the end of the day to actually go out and sell that 70-cent strangle just to be involved in the trade. That would give me a free trade on that put diagonal to the upside. I would have a free trade all the way up to 123. I would have profits down to 100 of about $600, right? And this would be my risk range, and it would be how much of an outlay? It would be an outlay of $2,200 until Friday in buying power reduction, which would be around 1%, between 1 and 3% that we talk about in my total portfolio. So I'd be happy with that. So let me know in the comments, guys, what you guys are trading tonight. I already have a put diagonal on. I might be looking at that strangle, which is that 100 to 124 range. And there's not a lot of juice in this one tonight. I wish I could hype it up for you and say Disney's going to be an awesome earnings play, but honestly, not a lot of credit juice there. And when we don't forget, when we are, last but not least, when we are selling, when we are doing earnings, guys, we are selling options because options implied volatility is typically higher. In the case of Disney, its IV rank is pretty low. It's 34%. It's not that great tonight. So a lot of option traders, all the serious pros, are probably just not doing much with the trade. If anything, they're probably doing more diagonals or calendars because of the low volatility. We would have expected it to be a little higher, but for some reason, people aren't into Disney right now. There's no big volatility to be had, mainly because maybe there's just too much uncertainty with Bob Iger, and the stock's run up already. So a lot of volatility is out of the name, and people are actually looks more interested right now in what the broader market is doing. So if we just take a look really quick at SPY, before we let you guys go. You know, the VIX again is kind of selling off in here. It moved up earlier. It's kind of like consolidating now, and looks like the SPY is trying to make it back to even here. But yeah, not a lot going on. The market's down, and you know, there's not a lot going on. I wish I could say there was more activity in Disney, but this is the trade. These are the trade options for tonight. Disney's trying to come back as well. It's actually now in the green for the day. So there's your Disney options. And let me know in the comments how you guys did. And I'll see you guys on the Discord and on the next stream. Thank you.